And yes, we are going live now with our latest webinar for the Australia-Indonesia Centre, where we bring to you the issues that matter between Australia and Indonesia. Thank you so much for joining us. I would like to begin first by acknowledging the traditional owners, the Kulin Nations, on the land on which the Centre's Melbourne office is located, and on which the modern city of Melbourne is located, of course, from where I'm hosting today's webinar. And I pay my respects to elders past, present and future. I'd also like to acknowledge the traditional peoples of two other lands of our guest speakers. Dr. Stephanie Fahey from Austrade is speaking from the Ngunnawal and Ngambri peoples' traditional lands, and Andrew Parker, I'm just going in, is from the Gadigal people of the Eora Nation. We pay our respects to elders past, present and future of those peoples as well. Now today, of course, is going to be very interesting, especially in light of the final process to get through the Indonesia-Australia economic agreement. So we will definitely be talking about that. But we also wanted to touch on broadly what's happening between Australia and Indonesia when it comes to trade, when it comes to business, but also investment in the region. Because of course, Indonesia being one of the largest economies in Southeast Asia, what happens there is of strategic interest. Australia's role in one of the larger developing neighbours is also intrinsic to that regional stability and growth. So we wanted to also take a slightly wider view about that and have a look at Southeast Asia as well. So that's what we aim to do today. And of course, this is part of our commitment at the Australia-Indonesia Centre to bring you insights and talk to people within our network that can help you learn more. With that, of course, we welcome questions, and we don't have the chat function turned on at the moment, but we will definitely have that on later. And I will let you know when you can start firing questions off to our guests. So just to look at a couple of the key things that have been happening in the past few weeks. The coronavirus pandemic, of course, has completely upended ideas around trade and business models. We've seen severe disruption in many industries, particularly in education and tourism. Investment flows are moving around. Trying to get a fix on the numbers is very difficult, but we do know that economies are being hit hard. What that actually means and how that will pan out in the next, say, 6 to 12 months is a big question. Of course, this impacts on domestic policies when it comes to business, when it comes to trade. Businesses and industries are having to revamp their models around, how to keep that economic bottom line healthy or as healthy as possible. And of course, an important subject for us, how can the nations of Australia and Indonesia work together in these difficult times and support each other and find ways to come through together and help economies to reboot and perhaps find different forms and ways of intertwining with each other. So we're going to have those discussions today. My panelists, of course, are Dr. Stephanie Fahey, who is the CEO of Austrade, Andrew Parker, who is a partner at the Asia Practice Leader at PwC, the large consultancy firm, the international consultancy firm, and James Castle, a founder of Castle Asia, well respected for his experience in Indonesia and the region, and also a board member of the AIC. And it's lovely to have everyone on for this conversation. Thank you very much for your time. We're going to start with a bit of an overview from our three guest speakers. And James Castle, I'll go to you first because let's get that real granular view on the ground in Indonesia. How has business been affected by COVID-19?
Thanks very much, Stephanie, and good day to everyone. It's hit Indonesia very hard, and the most interesting and difficult thing is the high degree of uncertainty. In all the years that I've been working here, I've never seen both government and companies so uncertain about the future and having difficulty planning. And I think we have to factor that in with the criticism of government, with the interaction with government. But what's happened in Indonesia, at least for the major companies, I'm very active in the International Business Chamber and the American Business Chamber. Below the headlines, there's been a high degree of cooperation, good communication, and goodwill that's developed between a lot of the relevant government departments and most of the major businesses, really with a desire to understand what's going on and to find some coping mechanisms. So that's a positive thing. And the second point, on the uncertainty point, we have to look at a lot of the information is alarmist, and it is no doubt it's frightening. But there was a very good report out of Indonesia and Melbourne last week saying that too much reporting on COVID-19 in Indonesia is missing the point. And what they're talking about is that the government, yes, the government was slow to respond, but like many governments, but it really had three alternatives. All had very high costs and all had very uncertain outcomes because we just don't know enough. The first was herd immunity, just let it go. The next was strict lockdown, and the next was sort of a social distancing program. And of course, social distancing and a lockdown have huge economic effects, which all countries, United States, it's a big battle in the United States, it's a big battle everywhere. And of course, no government can just have benign neglect and hope things turn out well. So with Indonesia's high population density in the large cities, and this is from the Melbourne report, which I found very good, some rural areas that make social distancing extremely difficult, the huge informal networks of people who in the workforce who work in public spaces and on the streets, they don't eat if they don't work. So we had a very soft social distancing. Now, the problem is, of course, we don't really have the health infrastructure to see how many have been infected. The way we're calculating the mortality rate is just looking honestly at the average number of deaths in a month and how many we had this month. And what we're finding in the health system is many Indonesians, if they have a victim in the family, they're ashamed. They tell the doctor, don't say he died of COVID. We'll be isolated. You know, it's a shame. Don't do that. So there's a lot of difficulties, just structural in Indonesia. And so what it's done, and I think this is the most relevant factor, the lesson we learn for the long term, is that it's highlighted, as it has in many countries, the weakness of the healthcare and education systems. We simply don't have the bandwidth, the human resources to respond in a very aggressive manner. So the government's doing the best it can by bobbing and weaving, and there's a lot of uncertainty. Now they have a tentative opening up plan starting in June. It's a 5-stage plan going into mid-July. That's very optimistic. In a meeting I was in this morning, I don't think anybody thinks we'll be open. I mean, mid to late June would be very good, I think. So what we've seen is the companies trying to keep their staff engaged. Some companies are still working full out. Others completely remotely. Of course, the service industry can work remotely. The mining and manufacturing industries can't. I think Nike still has 100,000 employees working, going to the factories every day in Indonesia. So the economy is grinding on, and everybody's taking every precaution that they can, but we're quite worried about, are we doing the right thing? What is the right thing, and what will happen if we have an outbreak? So maybe I'll just leave it at there, and we can respond later to questions. But I would like to, in the context of the CHEPA agreement, one of the really important things is the opening up of education and healthcare. And we've seen both of these sectors really have been left behind due to the old-fashioned regulatory system, which is highly nationalistic, highly autarkic, and run by a number of very self-interested so-called union groups. And so if this can help, if the CHEPA terms and conditions of CHEPA are applied, I think we can really see great opportunities for Australia, which is very strong in both these areas, but really an opportunity for Indonesia to seriously upgrade its healthcare systems, to catch up with some of its neighbors. Singapore may be a bridge too far, but catch up with Malaysia and Thailand, which have made great advances in healthcare and leaving Indonesia behind. So I'll stop there.
Thank you, James Castle. As always, very interesting, and several elements there that you've raised that we will definitely touch on during this conversation. I'll go now to Dr. Stephanie Fahey from Austrade for her opening remarks to help lead us into the discussion. Thank you, Dr. Fahey.
Yeah, thank you very much, Helen. And it's great to be back with the Australia-Indonesia Centre. And in fact, Andrew and I were on a panel almost a year ago today. And on that panel, we were talking about the potential of the Australian-Indonesian relationship. And we focused on the digital economy and agriculture. And we also looked at the services sector and how Australia might be able to support infrastructure, manufacturing, defence in Indonesia. But how the world has changed in the past 2 months. We in Austrade now are primarily working remotely. Our A-base staff who were in Indonesia have returned to Australia. But we still have our locally engaged staff, and of whom there are about 25 in different offices across the country. But what we've experienced in Austrade has been a global phenomenon, and many of the Australian businesses and Indonesian businesses are also having their staff work remotely if they possibly can. So it's not, what the context in which we're referring is not just relevant to Australia and the Indonesia relationship, but it's been something that the whole world has experienced. And it's interesting actually being in Austrade at this time because we have 1,100 people located around the world in 48 offices. We had our staff in Wuhan, and as we know, that's where most of the reporting came from when COVID-19 started. And Austrade was the only government representatives in Wuhan at the time. So we've heard from our staff in Wuhan, we've heard from our staff in Milan, because again, in Milan, Australia is represented by Austrade, both from a trade point of view and from a consulate point of view. So sitting in Austrade, I've been able to see the impact of COVID-19 as it swept across the world. So it does give me a particular vantage point for commenting on the Australia-Indonesia relationship at this time. But I wanted to make a couple of points before I move more precisely into some of my observations. And the first point is, this didn't start as a financial crisis. This is actually a health crisis. And the response to a health crisis has been different to the response that we had to the GFC, for example. So many companies now are hibernating, and governments around the world are assisting their companies to hibernate. And the Australian government has rolled out a number of strategies and policies and mechanisms to help companies through this period. The major challenge for a number of companies at the moment is the cash flow problem. So if you can hibernate and if you've got enough cash flow, you will make it through to the other side. So that's the first point I wanted to make. The second point I wanted to make, and it also echoes what Jim has said, that COVID-19 has exposed the weaknesses in different economies and also their social support systems. So from my perspective, COVID-19 hasn't actually pivoted the direction of history. It's actually accelerated history. So we're launching into a digital world that we knew was coming, but we didn't think would come quite as fast. So I'm of the view that it's not a surprise. What's happening at the moment in terms of the way in which business is responding is not a surprise. It's just happening much faster than what we'd anticipated. And within this crisis, there are many people and businesses that are suffering. But I also want to make the point that there are companies that are actually booming at the moment. And some work that's been done on small, medium-sized enterprises in Australia shows that 20% of those companies are actually booming. There are a number that are experiencing very serious difficulties, and individuals who are working for those companies are also experiencing difficulties. But the point that I'm making is that it's not all doom and gloom. There are opportunities, and that's where I think we need to focus in terms of our relationship with Indonesia. So we have a number of people on the ground in Indonesia. We've still got about 25 people there. And I've been encouraging Australian businesses to look at Austrade as their boots on the ground at this time where they can't travel. Austrade is there and they're able to provide services for Australian companies who are either trading with Indonesia or who have investments in Indonesia. The other exciting part is that we've had the ratification of IACPA, and that it will come into force on the 5th of July. And at the highest level, this means that 99% of Australian exports to Indonesia will go tariff-free. And also IACPA have put in place safeguards around data sovereignty, about agricultural market access, around services and around investment. So the coming together and the ratification of IACPA, and should I also say, it's amazing that that's been achieved in this environment. We could have very easily been distracted, but the fact that it's been ratified and it's coming into place on the 5th of July amplifies how important this relationship between Australia and Indonesia is, and especially at this time. So the fact that we pulled it off is amazing, and it's offering these new opportunities. And from what we see from businesses, they're not sitting on their hands. They're actually exploring very actively the opportunities that present themselves under IACPA. So as we go into questions, I think we'll have the opportunity to talk about the diversity of opportunity across the different sectors. So thanks, Helen.
Great. Thank you, Stephanie. That was, again, very interesting. I've written down several points from that, which I'm sure will be picked up during the rest of the webinar. If not, I would definitely be putting a few questions your way. And to finish off with our summaries, can I go to Andrew Parker now, the Asia Practice Leader at PwC. Andrew, a bit more of a wider view, perhaps, from you about how this is impacting in the region, particularly when we look at Indonesia and its aspiration to be one of the top economies of the world.
Yeah, sure, Helen, thank you. And good day to everybody on the call. Look, I wanted to start with just a little bit of a macro picture for Australia, and I guess a little bit like Stephanie, just point out the opportunity that sits here as well amidst what can be quite a gloomy outlook. But first, just some of the reality. So the Australian economy and indeed the global economy has been slowing down for some time. So this is not something which has occurred as a consequence of COVID, but was a trend that we're observing well before COVID arrived on the scene. But certainly COVID has accelerated that, and for a number of economies, there's been a really significant impact. In Australia, the Federal Treasurer has talked of a cost to the Australian economy approaching $4 billion a week So that's a pretty significant impact on the Australian economy, and net debt in Australia could increase by as much as $400 billion, at least based on current forecasts. Before COVID, our net debt to GDP ratio was relatively low by global standards at about 20%. But if you add in the net debt that comes about as a consequence of government stimulus and support packages, it's likely to increase towards 50% of GDP, which again, still by global standards remains relatively low, but is certainly very high by Australian standards and at a level that we haven't seen in Australia since the end of World War II. So it's a pretty sobering set of numbers to think about when you think about what Australia looks like. Certainly for most of the younger generations of Australians, they've never seen a recession. We've had 28 years of uninterrupted economic growth. And so for the younger generations, that's a pretty scary outlook. But I have to say that, in a global sense, we're actually in pretty good company. If you look at growth rates across particularly the advanced economies and developing world, Australia is around about the average, if not better. We're certainly in a good position on World Bank forecasts in the outlook period. So beyond 2020 into 2021, a strong rebound is forecast. And I think really importantly, if you can put that into context in the region that we sit in, the region that we're in at the moment is home to the only 3 G20 economies that the World Bank expects to come out of 2020 with positive economic growth, in those countries, China, India, and the one that we're focusing on here today, Indonesia. Now, of course, there's a lot of uncertainty in all of those forecasts, and we've seen already since the beginning of COVID some downgrades in the forecasts, and it's quite possible that there'll be further downgrades depending on how all of the management of the pandemic plays out across the region. In Australia, there's been a fair bit of talk that we're going to need to be more self-sufficient going forward, and that we're going to bring back a lot of manufacturing into Australia and quite possibly reduce immigration intake. This is partly in a response to the COVID outbreak, but it's also reflecting some of the simmering tensions that we have in our economic relationship with China, which is a very important one. But as I'm sure everybody would be well aware from the press, is one that's suffering a little bit of stress at the moment. I think we should remember from an Australian perspective, why we've been so successful, and we need to focus on the strengths that Australia brings to the table. We're going to have to tackle domestic reform in Australia. This is something that we've not really been able to do over the last 20 or 30 years, or not had to do over the last 20 or 30 years. And certainly the ideas of the free movement of goods, people and capital have enjoyed bipartisan support in Australia over a very long period of time, and they've underpinned the prosperity that we've enjoyed. So I think we're going to have to invest a lot more into protecting and developing the global institutions that have supported the international order that has enabled Australia to prosper. And we are a trading nation of just 25 million people, and so we're not going to grow out of this situation that we're in by looking inwards. In fact, I think that we can grow by looking outwards, and particularly looking to the region that we sit in. We are going to have to do a lot of things differently to what we've done in the past. But personally, I can't imagine a future for Australia over the next 25 years that doesn't really significantly feature the region, and most particularly the story of Australia and Indonesia's relationship.
Fantastic. Thanks, Andrew. And look, there is something that's been mentioned by all of you. It's around the regional impact and how that's shifting, I guess, where the opportunity is, or what we see as the opportunity. And Andrew, you mentioned China, and I think, this is one of the hot topics at the moment, of course. We see the tensions that are occurring at the moment in the trade relationship. You know, it's raised the question about, do Australian businesses need to look elsewhere apart from China, or do you see now with the trade agreement between Australia and Indonesia that there is an opportunity for that joint competitive advantage between the countries that perhaps is part of the broader regional play? You'll see on the screen there, we have one of the questions that came in beforehand on COVID-19, reiterating how much Australia relies on China. Realising this, will Australia's focus start to shift more to Indonesia? What industry should Australia be focusing on? So maybe, Andrew, I'll get your overview on that, then go to Stephanie because she's been talking about opportunities, and then James, pick up on you to see if you think that all actually works together.
Sure. So look, I think in some ways the challenges that we're having with China in the long run are actually for the good of the Australian economy and Australians. I mean, it's roughly 40% of our exports today go to China. That's a great story. If you go back a decade before, you know, China was a much smaller proportion of our exports, and so Australia has grown as a consequence of the economic growth we've seen in China. And contrary to a lot of sort of media opinion, the relationship with China is a much more diverse relationship than it was a decade ago. You know, we sell a lot of beef, wine, other consumer goods to China, and even services. Our services industries to China today are roughly equivalent to the exports of coal to Japan, our second largest trading partner. So just to put that into context, that, you know, there is no other market today which is going to replace the China market. So I don't think the conversation should be about how do we replace the China market. It should be how do we grow China, how do we manage that relationship. But at the same time, it does highlight the need for Australian businesses to look at the opportunity that exists a little closer to home, and we've been ignoring for 50, 60 years. And that is this relationship with Indonesia. It's a country of over 250 million people, a country that has an overwhelmingly young population and a rising income. If we look at where Indonesia came from around the time that the Asian financial crisis rolled through Asia, quite literally laying ruins to the Indonesian economy, it is today one of the $5 trillion economies in the region. So Indonesia is a very significant opportunity for Australia, and Australian businesses have not spent anywhere near enough time understanding that market. And I think IACPA is a terrific signal to Australia that there is an opportunity there, and for Indonesia to reach its economic potential. Jim talked about in his introduction education. Of course, this current crisis has highlighted health infrastructure and the institutions that go with a well-governed economy and a growing economy. So for Australia, the things that we're actually really good at, you know, I spoke about in my introduction, playing to our strengths. The things that we're really good at are exactly the things that Indonesia will need if it is going to achieve its potential. And so we've got a really significant opportunity for Australia here to add to our economy, to grow our way out of this trouble, but at the same time to help our neighbours to do the same thing. And overwhelmingly that has to be, of course, it's in Indonesia's interest, but it's also good for Australia.
Stephanie Fahey, your thoughts on this interesting moment in the trade relationships?
Yeah, so I think it is important to talk about China, and there's a lot of media coverage of our relationship with China at the moment. But can I just say that China is our most important trading partner, and I can't see that changing anytime soon. As we know, China is almost back to full capacity. Their factories are back, their trade is back, their domestic tourism is back. Some people have said, well, we don't really believe that. all you need to do is to consult with Google and you see the traffic in Shanghai. It's as congested as ever. You look at the pollution levels over China, they're back to pre-COVID-19 levels. So you can't manufacture the fact that China is back in business. So as one of the first countries to come out the other side of COVID, it is open for business. And Australia itself is in a very good position because we have been very successful in flattening the curve. So we are also open for business. So the two countries are expecting that they will be trading with each other, and there's no problem with that. But I don't think our relationship with Indonesia is actually based on the premise of whether we should engage with China or not. The reason we've got such a strong trading relationship with China is that we've got complementary economies. And the same circumstances are now emerging with Indonesia. So irrespective of China, the Australian economy and the Indonesian economy are starting to recognise the complementarity, and the business relationship will grow as a consequence. So as we know, the skill levels are increasing in Indonesia. There's increased innovation. So there are opportunities for some of our smart companies in Indonesia, but also the middle class is growing in Indonesia. So the demands of the middle class are around healthcare, around better services, about better education. So the complementarity in those areas are there for everyone to see.
And so that's where you see the opportunities, Stephanie Fahey, just to be clear.
Absolutely. I think it's in not only in export of goods and services, but it's also around investment and co-development and co-creation of some of the solutions. Because in Indonesia, there's an established mining sector. The opportunities for the METS sector to support a safe and clean mining sector in Indonesia are endless. Huge opportunity there. And also around food security. So Indonesia is focused on its food security, and at times like this, you can understand why countries have gone that direction. But Australia also is very strong in ag tech, so we're able to support the strategies and the policies of Indonesia by providing high quality services to support them to achieve the ambitions. So I see that the complementarity between the two economies is what's going to drive increased business engagement on both sides, both in terms of trade and in terms of investment.
Thank you for that. James Castle, I'll bring you in here. Interesting that Dr. Fahey mentioned co-development, investment, collaboration, ideas that have come up regularly in the past few years when it comes to the relationship with Indonesia and how business can engage. How does it work on the ground though? And where would that be at the moment, given what's going on with the coronavirus pandemic?
Yeah, well, thanks, Helen. I certainly endorse what Stephanie and Andrew have said. And I want to emphasize that it is a two-way street. And the relatively low level of Australia-Indonesia trade given against the potential is not just because Australia hasn't been interested. But the two most exciting areas, as we mentioned several times now, are education and healthcare. And until recently, they've been totally closed to foreign investment. So the real challenge is going to be, as Indonesia recovers economically, can they continue to open up in the spirit of the comprehensive economic partnership? You know, will they allow foreign campuses? Will they allow foreign doctors? Up until now, they don't. So it's really going to take I think a sophisticated and important effort to keep the door open, and so these opportunities can take place to the benefit of both countries. So that's really my concern, is that people start to look inwards, and of course, COVID is all about putting up barriers. And I hope those barriers don't become durable, because that's an excuse to block immigration, to block investment, so on and so forth. Oh, we have to bring everything on shore. See, we need to do it ourselves. There's going to be a strong push in that direction. And so I think it's going to be a real challenge for all of us who believe that that's absolutely the wrong way to go, to try and keep those doors open so we can recover strongly and even be more supportive of each other.
Thank you. And that does help answer one of the questions that we've had from our audience about the win-win perspectives and sectors that people can work on. I'd just like to perhaps look, I know we've looked at the three sectors or three ideas about where there might be some opportunity, but I want to still get a sense of how things might play out in the next 6 months. Stephanie, if I can go back to you for a brief thought on that, and then to our other two panelists, and then I'll go to another question from our audience.
Yeah, so I think it's looking into a crystal ball, and I think the optimists amongst us assume that we're going to come through the other side of COVID-19 and the world will go back to normal. But I don't think either Australia or Indonesia can assume that it's going to go back to normal and that we're going to get on top of COVID-19 permanently. I think COVID-19 is going to be with us for many years until we find a vaccine. So it really depends on how we handle the tracing of COVID-19 and how we manage to keep it contained. And if both countries can keep it contained, then that will give rise to a different future than if Australia follows in Singapore's trajectory, which shows that it had it under control and now it's starting to grow again. So assuming that we've both got it under control, I think the opportunities will be great. But until then, I think both countries are developing policies that will, as I say, help to hibernate the companies, and hoping that they're going to make it through to the other side. So both governments have been putting in place policies. But if we move to the future, I think there are opportunities that will emerge, and particularly in relation to our digital collaboration. So there's going to be opportunities in health. I think there are a number of e-health platforms in Indonesia that are also starting to increase the number of digital health consultations that they're doing. And the same thing is happening in Australia. So I think there's going to be increased opportunity for e-health, for e-education. But I also see that there's increased opportunity for digitisation to come into trade, because those of us who have been involved in export know that the process of exporting is archaic, and you need wet signatures on many of your documents, that digital documents are not accepted. That's starting to change, and change very fast. And the vision that Australia has for our borders within the next 10 years will be a frictionless border, that it'll be totally enabled by technology, and products and people will be able to come and go without using paper at all. And you know that that's also starting to happen in Indonesia. So those opportunities are actually really exciting. And another thing that we're observing with Indonesia is, although they've got a food security strategy, there are some products that are running short in Indonesia. And so there's some flexibility now around how much we can export into Indonesia so the prices don't inflate. So COVID has a tendency for people then to put up the barriers, but we're also seeing evidence where the barriers are starting to come down. So I find those opportunities actually very instructive in terms of the art of the possible.
I'll put that to Andrew Parker then. If we're looking ahead for the next 6 months, Andrew, and of course, Indonesia is not the easiest country to invest in, but do you think that now with this very different scenario, that business will be looking to invest? And I'll also just invite, we've got a question to put up around investment, you know, that eternal question around why isn't there more investment in Indonesia? If we can just pop that slide up to give our audience an idea of what we're talking about. But Andrew, 6 months from now, I mean, is business looking for those opportunities? Is it looking, you know, if it does have a bit of cash flow, that now is the time to take advantage of that?
Yeah, so look, I think that this is a longer term game. You know, many Australian businesses are still wrestling with the immediate aftermath of COVID and what it means for their domestic business. And you're certainly not going to be in a position to be competitive or successful in a new environment, in a new country, which you know, Indonesia has its challenges. If your business at home is not strong and secure, it's going to require investment. It's going to require patience, and it's certainly going to require a timeline that you know, most Australian businesses haven't been, you know, kind of comfortable with for quite some time. So I would discourage Australian companies thinking that they can go to Indonesia or anywhere else for that matter and make a quick buck. It's got to be a really long-term commitment, because that's what we've been guilty of in the past, and we've failed miserably. If you don't have the capital to back up that investment, then you know the chances of success are very low. What I would encourage companies to do, though, is to think about you know, those long-term strategic plays where Australia has competitive advantage or comparative advantage, where we are able to bring world-class capability, and most importantly, what we can do over this next 6 months or 12 months, however long it takes, is start to think more about how we build a relationship with Indonesia where we get to know each other. You know, there's been study after study which shows how little Australians know about Indonesia, and some of it's pretty embarrassing when you look at it and think about it. And it's going to be very difficult to do business if we don't understand and know each other. So I would say that's a really important foundation that can be certainly worked on now. Again, we're not going to complete it in 6 months or 12 months, but it's a really good place to start, because I think that also then leads you down the path of thinking about the areas where our relationship can be strategic. And what I mean by that is, you know, much of our relationship with Indonesia has been very transactional. We come and we go. It's very much about what can Australia gain from this relationship. I think we need to think a whole lot bigger about what is it that Australia can do to help Indonesia reach its potential, and to help Indonesia achieve its strategic objectives. Because if we do that and we make a contribution to Indonesia being successful, that will flow back to Australia in multiples of outcomes. So I think that's going to require a really significant change in how we in Australia think about the kind of business that we want to do. I said, of course, with Indonesia, but perhaps even more broadly in the region itself.
Okay, thanks so much, Andrew. James, I'll go to you. Looking at the next 6 months, maybe you could take it out a bit further if you like. And we're talking about investment, looking at those opportunities for business collaboration. We have a question around why isn't there more investment in Indonesia? If we can pop that slide up just so that people can see what that question is.
Why is Australia another big? Okay. Well, I think what you have to do is if you ask an Australian company, what kind of a company are you? Are you a local company? Are you a regional company? Are you a global company? If the answer is anything but a local company, then you have to say, what are you doing in the fourth biggest country in the world? And it's right on your doorstep. So you have to have, I always say, give me a reason you're not there. And it may be a good reason. I mean, wrong product, wrong regulation, we can't, so on and so forth. Indonesia has not been easy. So really the question is to ask any company, and every company should be asking itself, how do I see my company in the next 5 to 10 years? If I'm just going to stay local, fine. But if I'm going to be regional, then maybe China is a bridge too far and a bridge too tough, too competitive perhaps. Maybe Indonesia will offer some opportunities. And I have to say, it's a two-way street. Indonesia has been inward-looking and nationalistic. They put restrictions on foreign investment. So you have to look and see, in my business, what do I do? What can I do? What are the terms and conditions for Indonesia? Now, the COVID crisis has distracted from the fact that President Jokowi had a very comprehensive omnibus reform bill, has it before Parliament now, and it's not getting many headlines, but it was the contents as the President put forward to Parliament will open up Indonesia more. So let's hope that that can get through Parliament, and that as things settle down, we get into a new routine dealing with the pandemic, however it happens, that doesn't get derailed, and Indonesia continues to open up, and then it'll be a much easier two-way street. But again, it's always the question, where do you want your company to be in 5 years? And if you want to be regional or global, how can you, what's your plan for Indonesia? That's really a simple question.
Yeah, and certainly important over the next 6 months, James Castle, if you've got limited funds to invest and you're trying to find the place to invest them in. I'm going to go...
Helen, before we move from investment, could I just say a couple of things about investment? Because this is a question that's asked quite often, and I think it's important that we address it head on. But the first comment I'll make is that Australia does invest in Indonesia. So we're one of the top 10 foreign investors into Indonesia. You would expect it to be higher because of our proximity, but we invest 10 billion in Indonesia. And it goes across a number of sectors. So we have investment in manufacturing with Arnott's, Coca-Cola Amatil, BlueScope and Orica. We're also invested in the ag tech area, so CBH flour milling, Cheetham Salt. In financial services, we have this Commonwealth Bank of Australia. In services, we have Ramsay Healthcare. They've got 3 hospitals. Telstra is a major player in Indonesia. And in mining, we've got Thiess and Macmahon. So there are Australian companies who have invested in Indonesia, but it still doesn't address the point of why isn't it more. And I think there are a couple of reasons why. One is the complementarity of the economies that I was talking about before. Much of Australia's investment overseas requires a high skill level. Australia doesn't invest in mass manufacturing wherever it goes around the world. We tend to be more niche and we require a high skill level. So Thiess, for example, and Coca-Cola Amatil have been there and they've been training their own staff for many, many years. So the skill level for those companies is at a level that they require, but they've had to train their own. So that's the first point. But the second point is when you look at Australian investors, often they invest in a small way to start, and then they grow their investment. So if you look at the policies of Indonesia at the moment, they actively discourage small investment. So investment less than $1 million is not encouraged. The policy actually encourages large-scale investment. So if Australian investors have a strategy where they invest $1 million and then grow, it's one of the impediments for Australian investment. The other issue, and this is the one that James mentioned, it's around having access to visas in Indonesia. So if we're investing in Indonesia, we also like to be able to go spend time there. And the visa arrangements are quite restrictive for someone who wants to develop a long-term investment. So if you can only get a visa a year at a time, it doesn't create a sense of stability and long-term confidence. But also, as Andrew said, we invest in what you know and alongside people that you trust. So I think that's another challenge for Australia. There are people who have become familiar with Indonesia in the 1990s, in the first decade of the 2000s, but Indonesia has changed quite fundamentally since that time. So the experience that we have in Australia, I wonder whether it's as up to date as what it could be, because Indonesia is a digitising economy. It's got a young population that's very ambitious and very clever, very aspirational. And my question is whether Australian business actually is familiar enough with the new Indonesia and perhaps we're too stuck in what we thought Indonesia was in the 1990s. So it means that we need more familiarity. And I think international education has provided some of that, Indonesian students coming to Australia. But I think that with the new ventures from Central Queensland University and Monash University, where you're able to have 100% ownership of the university, 67% ownership of a vocational education institution, those businesses, and they will be big businesses, will require people to go to Indonesia on a regular basis. So my hope is that those educational investments will give rise to a more contemporary understanding of Indonesia and the potential of that market. I think that that international education sector is one of the leading sectors. In fact, it's the #1 export between Australia and Indonesia. In international education in 2018, 2019 was the #1 export. So I'm very confident that the familiarity that we all say we need for that closer relationship will come because of those international education opportunities.
Okay, thank you very much, Stephanie Fahey, for that. We've got 5 minutes left, so I'm going to have to keep it fairly tight from now, unfortunately, because everyone's got something interesting to say every time I ask a question. And we have been keeping an eye on the questions that have come up, so thank you to people that are putting those in. Perhaps we're not answering yours specifically, but I'm just getting a sense of them as they come in, and I think the panellists have been largely answering the questions that you've put forward, including about international education, which of course is a huge issue in itself. So it's nice to have a bit of input from you on that, Stephanie, thank you. Now my job is to try and pick the final 3 minutes and what we should spend that on. I think we're trying to get a sense perhaps of where the synergies are. So perhaps if I could just get you thinking around, you've mentioned some of the sectors, perhaps some thoughts around if you're a business now, maybe you're not going to, maybe you're thinking about what to do or how you can collaborate, or you're looking at those sectors. Just some thoughts around what would you be doing in the next, say, 12 months, perhaps, if you're looking at the region as somewhere that you are a part of it. Now, you might be a different part of the region at the moment, but if you're thinking about Indonesia, what would you do, especially in light of the coronavirus and how it's affecting how things are done? I might go to you first, James, because I reckon you've pretty much sorted this out given your constant daily conversations.
Well, I'm more familiar with the service industries, and obviously what we're looking at is how companies are going to be structured very differently when this settles down, when we reopen. You know, the office, who's going to be in the office, and I would really, in my own business, really have to upgrade our communications, our 21st century infocom structure. And I think that's going to be the major challenge. That's going to just offer tremendous opportunities to companies that have services and products in that area. So I just think we're very early days in that. Imagine Indonesia is now doing telehealthcare. I mean, who thought? I mean, who would have thought? And the Indonesians are quite internet savvy. They're plugged in. So I think providing goods and services in the 21st century way, it's going to just really, we're all going to have to adapt to that. And if we don't, we're going to probably find ourselves in a difficult business.
Thank you. Andrew Parker, some brief final thoughts?
Yeah, look, I mean, I think that, you know, there's been a lot of discussion in Australia about, you know, diversifying away from China. And I would encourage companies to think about the kinds of things that we've been successful in marketing to the Chinese, and think about whether the Indonesian economy, you know, is a place where those products and services will be relevant. Again, you think across, you know, what will be required for Indonesia to be successful in the coming decades. Infrastructure and those services that Jim and Stephanie have spoken about, health, education, these are all foundations and things that Australian companies are overwhelmingly good at. So we should think about how we can apply those capabilities to, as Stephanie rightly said, the new Indonesia. This is not the Indonesia of the Suharto years.
And Stephanie Fahey, to you finally.
So it's Dorothy Dixer to ask me what companies should do in the next 6 months.
We've sort of got the answer, haven't we?
No, well, I strongly recommend that they contact Austrade, to go to the Austrade website. We have weekly updates on the Indonesian market, what the opportunities are, what's happening there. We have regular webinars. So I would be participating in those webinars. So I would be getting the most up-to-date, on-the-ground information that you can about the Indonesian market. And I'd also be looking at export marketing development grants. People who have participated in export will know that you get a rebate for your costs of marketing into these countries. And the government has actually topped up that fund. So now you're getting 50% of your expenditure as a rebate. And in these difficult times, government said, we want that money out the door ASAP. So Austrade managed to get 44 million out the door to companies in terms of that rebate in less than 10 days. Unprecedented. So look at what the support mechanisms are from government and also from Export Finance Australia. So those who are requiring some bridging, in a sense it's bridging finance, you can go to Export Finance Australia, and there are special funds now for companies that were profitable before COVID, that they can get loans from Export Finance Australia, anything from 50,000 or 250,000 to 50 million to actually get you through this period. So I would be going to government to get up-to-date information and to get access to whatever support they're making available. So why not?
All right. Thank you. Thanks for that. And you mentioned some webinars. I have got a few details here. There's one on the 18th of May, Indonesia Agriculture and Food Sector Update. And on the 19th of May, the General Manager for ASEAN Austrade, Sally Dean, is hosting an ASEAN markets discussion. So if you get in touch with Austrade, I'm sure they can find details about that and join in on those webinars. Stephanie Fahey, you also mentioned international education. Here at the Australia-Indonesia Centre, we're hoping to hold a webinar on that as well. Obviously, a significant issue to be discussed. We'll have more details about that when they come to hand. And with that, we have to say goodbye because that's all we have time for, unfortunately. A great discussion. Thank you so much to our panelists, Dr. Stephanie Fahey, the CEO of Austrade, James Castle, the founder of Castle Asia, significant consulting and strategy company based in Jakarta, and Andrew Parker, the Asia Practice Lead and Partner at PwC. We value your insights. Thank you for joining us. Thank you to everyone who put in questions. We will be putting up more material following this webinar, including parts replayed, and bring you some of those incredible insights that we got, and hopefully people who didn't get their questions answered can go back and access them, and we'll look at different ways of getting this information out. So thank you for joining us for our latest webinar, and we hope to see you all again soon. Thank you.